and Steve from Connecticut, ever present. Okay, we've got some new folks with us. Don't be shy. Get in, ask questions, comments, whatever. You got anything to say, then just stick them in the chat box and I'll either answer them as I go along or I'll do it at the end. Can you all see my screen? The one that says live, how to become a professional trader. Can somebody just say yes? Thank you, says Ben. Thank you very much. Righty-ho, we've got quite a few new folks started with us. I'm going to stick this into the education area in the start here section. I've explained to folks, I mean, at the moment now, I'm supposed to be semi-retired, but crypto went absolutely insane over the holiday period, and I ended up working every flipping day bar one. But then again, we were making a shed load of money, so okay, we made the sacrifices. But I've not got much time to teach people privately, certainly the next few months. So this was I think it was a webinar that we did, but certainly was an article that went with it, and there's a video. I explained the process that I go through with folks who want private coaching, and everything that you need is inside the website. So if you are completely new, I would recommend that you go through this. I did actually just put this in the forum this morning in answer to a new guy from Singapore, Melvin. So I put this in at the top of the forum. So if you need to go find the links, I will put this link in the chat box, in today's blog post as well. But here tells you step by step what to do. There's also another one, an article from earlier in December. This is all about trading for clients. And most people that come into Forex don't have enough money, and therefore they end up risking too much. And you get a lot of people coming in with $1,000 thinking they're going to tell the boss to stick it within 3 months, and 3 years may be a more realistic goal. Whereas if you can trade for clients and share in the profit, then you can make a substantial amount. And to give you some confidence and to embarrass Ashley, who was with us this morning, Ashley kindly wrote an article for us for the Christmas period. Ashley joined us in February of last year. He dabbled a little bit, and like most of us, he'd done some silly things before he did, and he wasted money on signals and EAs and all the crap that all of us done on this journey. But he joined us in February, and by the end of the summer, I think it was August, September, he was starting to trade for clients. So it is doable, is the important thing, if you apply yourself. So those 3 articles, if you're completely new or if you've lost your way, you need to think about doing something differently. Because, I mean, I'm doing it at the moment. I'm doing a 12-week diet thing, but it's not a diet anymore. Every year I do a diet. Every year I lose a bit of weight, and every year I put it back on again. And it's the old Einstein quote, is that if you keep doing the same thing all the time, you're going to get the same results. So this year I've signed up with a guy. He's got a big stick that beats you with it, but he makes you accountable. And the similarities with the trading are the same. It's much better if you are accountable. When I work with private clients, I can see what they're doing, and they know that they're going to get hit with a big stick if they do something stupid. So again, the clever thing to do is to buddy up with somebody in the forum or with a friend, possibly with the partner. Although the wife and I had a good few arguments over this in the early days, I came up with a great idea of making her the boss and making me accountable to her. And that didn't go well. I'm not used to being told what to do. And it would be like, I'd said to her, look, the rules are this. I can only risk 0.5% per trade. I can only take 3 trades at any one time. If I have 3 losses in a row, I stop and everything. And I'd get to the end of the week and I'd lost a lump of money again. And she'd say, well, you broke the rules. I said, but you don't understand. This happened and that happened. You know what, guys? It's all BS. The only thing that counts with this is its profit and whether you can do it or not. It's just the numbers. I employed people for 20 years. I would never employ anybody ever again in a physical sense, because you get every excuse under the sun. The dog's died, the mother's not well, the son's not well, this has happened, that's happened. This is pure data. If you can prove that you can do it, we will give you money to trade. And if you're any good at it, there's millions available to trade. And I get offered every week people asking me to stop being retired from full-time trading and do it for them. And I don't want to do it. I've made a decision, life decision. I'm not doing it anymore. So there's money there. That is the way to be able to do this properly and professionally. And this is an opportunity I had years ago. I went to Rich Friesen. I was having problems after 3 years of trying to be a successful trader. I finally went off and got my head sorted out with Rich, and he put me in touch with a firm in the US, and I was trading for them. I'm not sure it was 100% legit in those days, but certainly wouldn't be now, because you need licenses and all sorts of things. Well, for what we are running, you don't need the licenses, because we hold the licenses. You in effect are subcontracting to us, and we can even take Americans and Canadians. So there's not many countries that can't do this. So that is what you should focus on, and that is what you should try to do. But on the basis of a plan, we always talk about, and they're included in these articles here, about create a business plan, create a trading plan, rules, stick to them, be accountable, structured, disciplined. Because I say, just like me with the diet, if you do the same thing every year, it's going to be the same result. And I know with a diet, I might last a month, I might last 6 weeks, and I'll generally lose what I aim to lose. Although after the lockdown of this year, I've got more to lose this year. But then within 2 months, 3 months, I'll be back to normal. I'll be back to doing what I've always been doing. And it's the same with you guys for the trading. There's some of you in this room have been trying to do this for years. I spoke to a guy recently who'd been trying for 15 years. It is addictive. It is frustrating. It is annoying. In fact, I talked to a gentleman yesterday who tried for 5 years doing it as a full-time job. And it's the most frustrating thing you will ever do. But you need structure, you need rules, and you need to change your plans. Stop doing what you keep doing, because you will not get a different result. Okay, let me get a quick sip of my tea. Any questions on those subjects so far? Lots more folks coming late as well. Morning, Maya. And who else we got in here? Chell, don't recognize that name. And Adi, and Dom, and Edgar, and Farah. Hi, Farah. And John, Matt, and Maya, Nick probably still trying to get back to Thailand, and now no chance. The UK went back into full lockdown again last night. Not quite as strict as it is in Spain, but supposed to be now in full lockdown. Ronan, morning to you. Sarvin, hi Sarvin, long time no see. Stelios, Stefan, Sue, Lim, and Valerie. Hi Valerie. Right here. So everything you need is in there. You need to follow the plan. You need to implement it. You will be better off this week sitting down and going through all this and thinking it through and writing it out and creating yourself a plan for the year ahead. And I find that in terms of life as well. People who are successful, the most successful people in my experience, are the ones who have a plan with goals, smart goals. And as I explained to somebody yesterday, if you're completely new, you should treat this, and this is the bad news, guys, realistically, if you're completely new, it'll take you 12 months to get onto a funded account. But if you think about that, if you joined us for a year, it cost you $200. If you go to university for a year, it'll cost you 20 grand. And you'll have to do 3 years of it, and there's no guarantee at the end of it that there's a job that will pay you any money anyway. And obviously with the COVID crisis, more and more people are working from home. More people have realized how fragile their income is, and perhaps some are not receiving any money from the government or are hanging on by the skin of their teeth. You know, it's a good, the flip side of all this COVID situation is it's a good time to take stock of your life and say, hey, I want to make some changes. I want to be in control for a change. I'm not just going to sit here and let them all throw all the shit at me that they want. And on top of all that, when all this is done, as I've explained in recent weeks and months, there's a bill to be paid, and believe me, they're going to come for you. Whether it be inflation and interest rates and extra taxes and everything, it ain't going to be easy at the end of this. So make a plan, implement the plan, and take some steps to improve your life and improve your trading life as well. Yeah, Ben was saying for the funded account, do you need to show 6 months proven track record? And Ashley answered for me and said, yes, that's what you need to do. There are caveats to that. There's 1 or 2 of you that have been trading for a long time and already may have some kind of track record. You can maybe get there a little bit quicker. But I say at the end of the day, if you could learn a skill within 6 to 12 months that can earn you 6 figures and working from anywhere in the world, then think about the education. And again, there's a new guy in the forum today, and he's talking about he's completely new, when should I open a live account? And he's like, no, you should not be thinking about opening a live account. There is a saying in this game, a 90-90-90 rule. 90% of people lose 90% of their account within the first 90 days. And the reason they do that is that they think it looks easy. They have no idea what they're doing, and they're gambling, not trading. And I have that t-shirt. I was one of the idiots that did that. So, you know, learn from my mistakes. That's what you're here for. Oh, Ben can't see the answer. He should be able to see. It should be in the chat box, Ben. Anyway, yes, he answered the question for you. Right, so everything you need is in here. I will add this to the start here section. And where's my mouse gone? Excuse me, guys. I think the battery just died on my mouse. Now it's back again. So for those of you new, go to the education area, work your way through, and follow the rules and follow the path that I've laid out for you in here. Okay, righty-ho. Let's have a look at some charts. Now, after Christmas and the holidays, often things don't fully get going until after Martin Luther King Day. And I believe this year it's on the 15th, which is the average. Last year it was later, being the 20th. You've also got the Trump situation. Is that today, tomorrow? Well, the less said, the better. But if Biden gets elected on the 20th, hopefully there will be, from a market point of view, some semblance of normality, and things should become easier. You saw over the Christmas period how some of the pairs didn't move hardly anything. And this week could be slow. So as I said earlier, you'd be better off planning and working out what you're going to do differently this year. But what I'm going to show you, I'll go through the structure of what's going on the bigger picture. I'll show you what I'm looking for. I did Earth and Sky this morning. Pierre, family panic, and the COVID in South Africa is really bad and he can't get to the internet. So I needed to do it this morning. There's not too many on there, but there are a few really nice setups on Earth and Sky. And I also showed about using the structure of the market, because if we are trading from longer time frames, which is my thing, I like to place orders at the market open on a Sunday night and walk away. That is me. Most of my work, a couple of hours on a weekend, is the planning. The actual physical amount of trading is 5% of what I do. I don't do a right lot, but it's the quality of the planning that I do that makes me successful. So here, you as ever are looking at structure. Is it going up? Is it going down? Is it going sideways? And clearly the British pound is going up now on a weekly. It has now broken through the 55 EMA. I only use these two EMAs these days, and I have on the monthly and on the daily, I have the weekly and the monthly ones showing as well. And the reason why I use them, well, have a look, guys. This is the first one we're looking at this morning. This is the pound. And the pound USD, numerous occasions, came up on a weekly chart, tried to break through the 200 EMA and failed on 1, 2, 3, 4, 5 occasions. Then it went through, resistance became support. Then it came back down again. Another few times it rejected. Then in here, I was saying this was not a great idea to trade because the probability was it was probably going to bounce between here and here, which it did. Now it's gone and it's up here. Now we're looking for a pullback to long this pair, but it may be this week that we don't get that kind of trade. And the other thing to notice, we had a lot of dollar weakness towards the end of last year. There is a lot of MACD divergence at the moment, and this is even on a weekly for the pound. And if you're not familiar with MACD divergence, what it means is that the high here on the chart, the high here is lower than the high there. However, on MACD on the trigger, this high is lower. This is a clue that price is about to change. I find generally this to be one of the most reliable indicators. I don't bother with stochastics anymore because they can be overbought or oversold for months. Usually I find this to be really reliable. And I remember saying this in a live session back in the summer, maybe August, September. And after that, for a few months, it stopped working. But generally, when we've got rid of Brexit, when we've seen the back of Trump, and hopefully we start to see an improvement in the COVID situation, I think things will settle down and become a lot more predictable. Generally, I find this to be a good indicator. So it's just giving you a heads up that this might well have run out of steam. And if I'm going to trade, I only trade with the trend 90% of the time. I am looking for a pullback. So the big picture, where are the areas? Well, the areas are 133 and 131.60. You go down to the daily, fib it, and you are looking for what I class as the sweet spot. And on the pound, I quite like the look here, because here you've got the monthly 55 as well as the daily. You've got the 50% fib underneath, and we have some previous support and resistance going on here. It's not the strongest in the world, but there's some. So that is an area of interest. Here is a stronger area of interest. You've got the 200 EMA. It's clearly been stronger at support and resistance, and it's 61.8 fib. So for me, what I would do with this, with the pound this week, I would put half of the order here with the stop below the 50% fib. So I'm risking 60 odd pips for a potential gain, potentially 5-6 times the risk. And the thinking is, well, this is where it was last week. If it goes on a run again, where's it probably going to stop? Could, of course, go further. So that is a good setup for me. But the danger is it might drop all the way down here. If it does, I would take it again down here. I would then be below the 200, which is a stronger support and resistance line. I would go below the recent low, so 50, 60 pips away. Should give me 1 to 2, 1 to 3 here. Could give me 1 to 10. So those are the areas. However, this week we might not get there, and we'll cover that in a little while. Euro USD, similar scenario. This was over the Christmas period. I forgot to cancel this, and I put it, well, I didn't put it in again. I forgot to cancel it. But again, this is a really good example. 120 is a huge number on the euro dollar. And the whole numbers last year, last 18 months have seemed to be really important. The amount of times prices bounced to the pip off a big whole number, especially the decimal 10. So you look here, this is 120 whole number. It is the monthly, I think it is monthly 200 EMA. It is major previous resistance. It then broke through and became support. And if you look back further, there we go. Where's the arrow go? If you look back further, it was major support and then resistance previously. So the thinking is, guys, is not to overcomplicate this. If this drops, where is it probably going to bounce? And the probability, that is the area that draws my eye. And then when I go in and fib it, I've got the 55 EMA as well crossing over the 200. I've got the whole number. You could be really aggressive and just go under there, 20 odd pips and below the whole number. Or you could go below the 50% fib. Again, the limit for me for stops is about 70 pips. But the thing that influences the decision the most is what is the potential reward. And I think, from my calculations, this has the potential to go 4-5 times the risk. And therefore, it's a good trade setup. Again, might not happen this week. Right, I'm going to quickly go through the rest of these. Anybody who's got any questions on M2, on this longer time frame, stick them in the box, because in a little while we're going to change platforms. Euro pound at the moment, I'm not paying any attention to it, because after Brexit and all the chaos, we need some clear direction. And you can see in here, if you look at where the price is at the moment, there's clearly something being going on here. But if you think we're looking for repeatable patterns, what went on the last year was just chaos. It was silly. And therefore, for me at the minute, I want to know, does this want to go up or does it want to go down? And you've got it seen as a positive for the UK that they got a better deal than expected. Equally, the EU, both sides declared it was a good deal. Bear in mind, I told you for 4 years that they would decide at the last minute, and I was 6 days off. I said that it might even go to New Year's Eve, but I said all along they would come up with a fudge, if need be, any kind of deal. And as it was in the end, both sides trumpeted it as being a decent deal. So now you're trying to evaluate the Eurozone economy against the UK economy. And at the minute, everybody's economy is in the same mess, because everybody's borrowing and printing money out of thin air. UK has now gone into full lockdown again, which clearly is not good for the UK economy. But then again, they have vaccinated more people than the whole of Europe, and therefore they may come out of this quicker. But at the minute, you could flip a coin, guys. Is it going to go up? Is it going to go down? I have no idea. If you have no idea, walk away and leave it. Swissy is miles away from anything in terms of a stop. Where the heck are you going to put a stop on this one? Not of any interest. And most of the time, I only use the Swissy for correlation. And what that means, if you knew, if the euro is going up, see the clear pattern here, the Swissy 90% of the time is going down, and therefore it is the same bet. And therefore you don't take both of the trades at the same time, and you certainly wouldn't take the Swissy over the euro at the moment because there's nowhere for this stop. What does have a place for a stop is the CAD. The CAD 130, whole number again, has been a huge area of previous support and resistance going back many, many years. This is a weekly chart. There are many occasions where it has pierced through and then it has reversed. Yes, sometimes you will see that it has broken through, but it basically, the mean going back over years is here. And then here it bounced off it. And this again, this is months and months and months. I remember trading this when it was way down here and it was major resistance. So it is a huge area that broke. So it's a whole number. It's a psychological level. It is support and resistance going back years, maybe a decade. So is it significant? You bet it's significant. So what we looked for price to break through, close, pull back and short. Now we are looking for a pullback again. And then we have to determine, well, where would we place the stop? So you put your fibs on, you put on some trend lines, if that's going to help us. Let's maybe go from the top down here. And you are looking for multiple reasons where to place the stop. So here, I always place an order. If it's 130, I always place the order at 129.90, 10 pips below. Reason is you will often see, like here, this one came down almost to the pip, touched it and bounced off. If you didn't have your entry in the right place, it'll miss it and then go 300 pips. So I have the order at 129.90. So I'm in here. I have, for reasons to believe that it's probably going to stop here, first and foremost is it's done it loads of times before. It's that complicated. It's also a weekly trend line that goes back to the beginning of the year. It's also the monthly 55 EMA, and then you've got the 200 EMA here. So the 200 EMA, the issue is going to be with this is that is too far away from a stop point of view. It's 120 pips. Having said that, a position trader would still take it because he would be thinking he can still make 3 times his risk by getting down here. In here, if to be more aggressive, you say, okay, I go above the whole number, I'll go above the 50% fib and the trend line. So I'm in here at 60, risking 60, potential 300s here, 1 to 5, where it's been, and potential probability that it will probably bounce if it gets to here. Hi, Tony. Hopefully that just explained the reasoning, Tony. So the EMA, as I say, I only use the 200 and the 55 now. Dollar yen is miles away from anything. I want it all the way back up here. Euro yen is interesting here. And again, can you see it came up, it consolidated, dropped, moved up again. Clearly it is consolidating at the moment here. The sweet spot on this one will be down here. A swing trader will be looking up here. And the euro yen, I have fibbed it as though it's going up. And therefore, I was saying on Sunday in my analysis, I'm thinking of a long here because you are looking at a 50 pip stop for a potential 250 pip gain. And you don't need many of them in a month to be a profitable trader on a big account. And that is the key to all of this. Now, I've put this on here because I'm going to show you when we go into Earth and Sky, I'm going to show you another way. If this doesn't move much this week, and it's quite possible with it being the first week back of the holidays, then you need to be a bit more flexible, and we'll have a look at that in a minute too. CAD yen, most interesting place is up here. One of my private stewards, Tobias, reminded me about this. I'd forgotten about this. I don't swing trade that often, but if you see here, 200 EMA has been in control going back to July 18th was the last time it broke. It here bounced to almost to the pip off it. You got the 55 EMA up above it as well. So the areas of interest for me are to short here and to long down here. And again, you then go down to the smaller time frames, trying to find the multiple reasons for where to place your stop. So that is looking at the big picture. And again, 200 EMA, people say, why do I use the 200 EMA? Look back at what it does, guys. This is a 200 EMA. This is the Aussie dollar. Said pre-Christmas, if we get a break here, you're looking for a pullback. where would your overall target be? The 200 EMA. That is a 430 pip move. It is not rocket science. It is not crystal ball. It's just probability says that everybody and his dog is aware of where that monthly 200 is. And on multiple occasions in the past, yes, it broke here, but here, this area has also been major previous support and resistance. And so I use the EMAs for stops and trend lines and combinations of things. And on here, I've not put a trend line on here really, but let's stick a trend line on. So in there, I've got multiple reasons in this area. And then, okay, this is a weekly. If I fib this, multiple reasons to think if it's going to bounce anywhere on a drop, it's probably going to do it there. You wouldn't take it here because it's probably going to bounce off that. And where are you going to place the stop? There's nowhere for the stop. Now you go down to a daily, and often on a daily, you will find somewhere for the stop. There's not even anywhere here, guys. This is a terrible place to take a long on this trade. Swing traders could take a short. I think Ashley did yesterday. Again, my issue, I don't really like doing that. It's where to put the stop. But this is no man's land. This is ignore this pair until it does something or walk away. New Zealand dollar did the same thing. Break of a major weekly trend line that went back a couple of years. Breaking of the monthly 55 EMA. That was the target. Now, eventually, it's gone through. So now this becomes support. You start looking at a long. But that was the target from here to here. And it did reject there on a weekly. Okay, so Aussie CAD sweet spot is down here. Just basically, I mean, every week I just rinse and repeat, guys. It's the same thing week in, week out. You're just looking for the sweet spot. Where is it probably going to react? You're welcome, Tony. Right, so that is M2. Let's have a look now at Earth and Sky. Now, Earth and Sky this week was tricky. And the reason it's tricky, this is the Euro USD. You have all the indicators are green, so you're looking for a long, but it only moved 29 pips all week. And Pierre's rule is that it has to move 50 pips. And the reason is it gets so scrunched in here, you can't rely on anything. So that is a no trade. The New Zealand dollar, on the other hand, was a trade, and it actually did this yesterday. So this is the area, and this is what I've shown you before. I really like it when you've got the weekly pivot above for a long and underneath for a short. So in here, again, you've got multiple reasons. You've got the 55 EMA on a 4 hour, you've got previous resistance and support, and it's now done it again. So it gives you a feeling that the support's even stronger, and you've got a weekly pivot. So you're looking for price to come back into this area to go long. Then you're thinking about, well, this one's potentially 80 pip move. The Aussie is almost the same. Notice the pattern? The pattern on the Aussie and the New Zealand, they are correlated. They go in the same direction most of the time, and therefore you don't take a long trade on the Aussie and the New Zealand at the same time, or a short at the same time, because it is the same bet. So then you have to decide which one has the best potential reward against the risk. And I think on this case, they're actually both about the same. So then you go off as normal practice anyway and have a look what news is due out. Is there any news that's due out in the next day or so that could screw the Aussie and not screw the New Zealand? So again, you should create a checklist before you take a trade. Have a checklist that you go through. And personally, I prefer to do it physically on a bit of paper, because I find if you write things down, you tend to follow it more. If you're more computer savvy and you prefer to do it online, then do it online. But have a checklist. Are all the EMAs in the right place? What has it done its daily range so far today? Is there any news out, etc., etc.? Right, I just need a sip of my tea, guys, and to take my jumper off because the sun's come out and now it's got hot. And I just need to go shut the curtain a little as well because I can't see. Just bear with me a second. Any questions, stick them in the box. Okay, back again. So Aussie dollar, Aussie yen. So all the Aussies, or a lot of the Aussies, have lined up. This one did come back into the zone. I would prefer the Aussie dollar and the New Zealand dollar because of the fact that the weekly pivot was above it, and the area that it's coming down to is more substantial for me. This one, it came down. It did bounce back off the area. I'd be wary here because the danger is it's going to bounce back into this. Whereas on the Aussie, I'm more thinking about taking it from the weekly pivot and back up again. Euro Aussie, similar scenario. It's did 124 pips last week. Be careful now. The ones I'm showing you now, you need to be careful with, because the spread on some of these is horrendous when the daily candle closes. The pound Aussie, for example, I have seen the pound Aussie spread go to 100 pips, which means it will take you out, even though it doesn't look on the chart that it did. And it might get you in if you've got a forward order and you end up getting in 100 pips worse off than you intended to get in. So if you're going to trade any of these pairs, then be thinking about doing it in and out on the same day. Again, the areas up here, weekly pivots further away, not for me. Aussie Singapore dollar, I think Pierre picked these the other week because of the lack of movement, he was struggling to find things. Never ever traded it. I have no idea what the spreads are like, but I'm guessing they're not good. Again, it's come down into Pierre's zone. The weekly pivot was in the way. New Zealand dollar, Singapore dollar, similar scenario. If you'd taken this one, it would have been a loss. Then the other thing to note is, if you remember, I showed you on the euro yen on my longer time frame that at the moment this is in the middle of nowhere. For M2, I cannot trade this week because it does not fit my rules. I don't have multiple reasons for the stop. I don't have, well, it just doesn't fit my rules. However, if you look on the 4 hour, you have got the fact that it is trading in a range, and it has bounced on multiple occasions now, going back to the beginning of December on what is clearly major support and resistance. Now, the stop is not brilliant, but you have got the 200 EMA in here. The other thing about this is you've got to be careful, because although it has spiked up 130 pips, this area here looks stronger to me. So you're thinking here, okay, this might make us 70 pips. So what to do? Well, you could go in and just put your stop below the 200 EMA, risk 20 pips and hope that you're going to get away with it. And on previous occasions, it has worked. The other option is we go down to the M3 and we look for reasons for the stop. And I will show you that in a minute. USD Swissy, I showed you on the weekly, it's nowhere near anything for a stop. This doesn't qualify because it only did 32 pips last week. But if you like to trade this, it's your bag, then clearly this is an area of interest. Dollar yen only went 12 pips all week last week. Again, area of interest, but not multiple reasons. Euro pound, as I've explained, is just, I have no idea. And pound CAD, somebody asked me to look, again, I have no idea. I don't take trades when there's a bunch of EMAs all in the same area, because you just end up bouncing between all of them. Now, let me put on the M3 profile. This might take a minute for it to recharge. Now, let's have a quick look at what that's doing. Not that one. Where the heck have I put it? Okay, I've had a few people this morning asking me about Bitcoin. As you know, I have been heavily involved in buying Bitcoin and other cryptos. We had one of our cryptos the other day, one of the smaller coins that I am invested in, that shot up 400% in an hour. And mercifully, I was sat watching it and was able to send out a message to folks. This is Bitcoin, and as you will have seen over the Christmas period, it went absolutely crazy. But the thing I pointed out to folks is that you will see with crypto that it respects Fibonacci particularly, and the EMAs that we use here at Mentor Pro. So we had massive moves. I mean, this was the webinar I hosted in the end of October when I explained to folks why I was so passionate about it and why I believed it was going to double. I said within 6 to 12 months, it did it within about 3 weeks. Here was where folks started to panic, because I had beta testers who joined us who paid 8,100 for their Bitcoin, and it doubled at this point. And then the news started. It was going to be a crash. It's going to be a massacre. It's going to be a bloodbath. It's going to go back down to where it was going to go to. Well, I said to folks, don't sell. This is 23rd of November. This is a buying opportunity. What is going on here is that the big dogs are trying to scare people into selling because they want to buy them cheaper. And I explained in that webinar, and there's a replay inside Mentor Pro now. If you go into the website, I have created a new mini course as an introduction for crypto. And the big dogs, PayPal, Grayscale, a big American investment company that is regulated with the SEC for Bitcoin, and they were all involved. So it dropped. This was a buying opportunity. Then over the Christmas period, my daughter's staying with us at the moment. It's hit 30 grand. Well, I thought it would stall at 30 grand. It's gone to 32. It's gone to 34. It went to 35. I mean, these are crazy moves. I've said all along, I expect it to get to 50,000. I'm beginning to think now that it could go considerably more. And if you watch that webinar that I've just shown you in the crypto area, you will understand my reasoning. Then it dropped yesterday. It dropped and it dropped 20%. And now you get people panicking. This was a buying opportunity for me. This again is going to be shaking the tree. And I think this time when they come to shake the tree, they are going to shake it even harder. There's going to be press releases. There's going to be talking heads on the news, the television, everywhere. It's the end of the run. It's going to go back down to 5,000. It's going to crash like it did last time. Again, to me, this is a tree shaking exercise. But this is what we have done. This is a special case. I'll show you this in a moment. The other one of my top two now is Ethereum. And Ethereum, we bought down at 180 on the webinar, 28th of October. It was at 380. I said I thought it would double. Again, we did another webinar, I can't remember now, for Rich the other week. It's doubled again. Ethereum is the blockchain on which about half of these new projects are built on. So it's like the nuts and bolts as well as being a blockchain in its own right. And I'd explained all of this to folks. The third coin that we did have was XRP Ripple. And XRP Ripple on the day of the webinar was at 24 cents. It shot up 225% in a month. We didn't take the profit there. I believed at the time it was going to keep going. My daughter took some profit when it pulled back into here. Here was a buying opportunity. Notice this. And this, if you have a look on TradingView on crypto, it's the amount of times that these crypto coins bounce to the pip off fibs is spooky. So this was the buying opportunity. So we're going back up again. Everything's great. Bang. Out of nowhere, the SEC are going after Ripple. And they're going after Ripple Labs, the owners. And Ripple is unusual in the crypto world. Bitcoin, for example, is decentralized. There is no central entity that the SEC can go after. And the SEC have actually given Bitcoin credit in that they have allowed Grayscale to invest in Bitcoin. The Ethereum has been given a vote of confidence by the chair of the CFTC. But this lot, when they did their original launch in 2012, the SEC is suggesting they should have not raised it as a coin, they should have done it as a security. And I have read the first few pages of the SEC's explanation, their paperwork as to why they're doing it. I think they're right. So what happened here, we said to folks, okay, we're selling. At this point, we sold 60% of it. We'd still made 100+% profit, but we're selling at least 60% because this could tank. On the way down, we sold a bit more. And then down here, I sold the rest of it. We had a dead cat bounce, and it just didn't look as though it got the momentum to keep going. Now, there's reasons why, speculatively, I think that this could shoot to the moon if Ripple come out and settle with the SEC. Unfortunately, at the moment, they're shouting at the SEC and saying that they're going to fight it every inch of the way. If they carry on with that, then this may go nowhere. But common sense surely would be to protect the brand, but this could shoot back up again. But what we did here, we told folks we're selling. We got out here, we made 100% profit. We put it half into Bitcoin here. And again, price has broken 20,000. People are saying, oh, it's too expensive, it's scary. Look, basic support and resistance here. We put it into Bitcoin, into Ethereum. This went up 50%. Ethereum, we put the other balance into Ethereum. That more than doubled in 2 weeks. So I can't tell you anything else if you're not a member of the crypto site, but that is the strategy that we're using. We are looking at smaller coins, making a profit, and then converting them into some of the bigger ones. I think Bitcoin has got longevity, it's got legs. I think it will double again without any shadow, and equally for Ethereum. But some of the smaller ones have the potential to make hundreds and hundreds and hundreds of % gain. So that's the plan. Right, so the things to note though, technical analysis, crypto, work. The other thing to note, do not trade it with leverage. You will lose your shirt. If you think that you're going to go in and use a broker and 10% leverage, even 3% leverage, you will kill yourself. You'll kill your account. So I am not using leverage. I am looking fundamentally for blockchains and coins that have a reason to be. I'm looking for the next Amazon. I'm looking for the next Google. All of the things came out of the 90s .com boom. But anyway, technical analysis that we teach at Mentor Pro. Have a look at that new crypto course. Let's say it's in the top menu. Have a look in there and you will start to understand why I'm so passionate about it. And I put a recording in of the most recent webinar that I did and why I explain why I believe it's the best financial opportunity in your lifetime. Okay, so all of that's in there. Now, this is M3. So my preferred way to trade, I trade from the big picture. I trade from weekly charts and I go down to daily looking for entries, as I've shown you. I have sat doing this for 20 years. I don't want to sit doing this anymore. I just want to trade and make money. I don't get a buzz out of doing this. I don't get a kick out of it. I don't want the excitement of it. I just want to make money. That is my goal. And therefore, for me, I only use this when I'm struggling to find anything on longer time frames. But some of you like to trade. Some of you have got a few hours a day where you want to trade. And therefore, this is a strategy that you can use. This is in the education area as well. But to use this, you do need to use a top-down approach. You need to understand the big picture. Is it going up, down, or sideways? What is your bias? Do you, for example, with the Aussie dollar at the minute, think it's going to go up? Or you think it's going to go down? That is your bias. And then you load the M3 and you are looking for, at the start of the week, what's your bias here? So the bias at the minute, I'm more interested to buy than I am to sell. If I'm going to buy down here, I'm then thinking that this has got the potential for 90 odd pip gain. And this is the monthly 200 up here. And I've just shown you how many times price will bounce to the pip off these major EMAs. So this is the weekly pivot point. And here, the biases that we want to long. At the moment, I showed you on the longer time frame that price is miles away from stops or anything. I can't do anything with that. But here, it's a different mentality. It's a different psychology. You're not going for hundreds of pips usually, but you are still looking for a 1-to-2 risk reward ratio. One of the ways that you can use this for entries is you just wait for a cross, an arrow to print, and these do not reprint. And then you are looking at the potential reward against the risk. The problem with this one is to take it there, the risk is 65 pips and the reward is only 60 pips. So I want a 1-to-2 risk reward. If it had given a signal here, then that would have been great because the bias is long. You're thinking of a 28 pip stop and a potential 1-to-3, 1-to-3.5 risk reward. But what I do, and I haven't done it this week because I just haven't had time, on a Monday, normally I just go through the pairs, I set them all up, and I'm looking at what is my bias. And here for the Euro Aussie, clearly it's meandering around, but my bias is more to long than to short. Here was a half decent signal. Then you've got 40 odd pips risk for a potential 50 gain, and that's what it's done. So you can put a line on here if you want as well. The probability ain't good enough for that, and it's not good enough for a short either. Pound. Well, the bias initially yesterday would have been to long this. This was the short at the top. That would be going against the trend. And here you would be thinking, okay, I need to risk 60 for a potential 60. Not great, not going to do it. Down here, you wouldn't have taken this because you are waiting for it to cross and you are waiting for it to give you a signal to go long. You wouldn't take that at the moment because you're risking 60 for 80. And here, it's giving you a signal to short. Now, you're only risking 60 here, but the other pivot is there. So at the moment, this week, because it's been flat over the holiday period, and because it's probably going to be slow this week, This is not necessarily the best thing to trade. This is the USD CAD. USD CAD, the bias we've just looked on the big picture is we only want to short. So this was the first area to look. Here, you're looking at there. Well, 50 pip stop, 70, 80 pip gain. Yeah, maybe that one's not so bad. Maybe that one's of interest. Euro pound, I said to you before, it's just a complete mess. I have no idea what it wants to do. This is that euro yen. Now, the one thing that screws my theory up with that euro yen is that these two pivots are too close together. So for me, really, with this, I would need this to move back up again here. But hopefully you can see the thinking behind what's going on is big picture, big areas, what's going on. If you can't find anything on the big picture, go down to Earth and Sky, 4 hour, look at the structure. And then if you can't find anything, or you're struggling to find somewhere for the stop or the entry, go down to M3. CAD yen, look at this. Again, at the minute, it's just too messy in here. If it could break above here, then that would get interesting. But in here, the distance between the two is 20 pips. Too messy. Here may be of interest. Now, 80 on this pair is a big area. So if this comes back up to here, have a look on the 4 hour, have a look on the daily, but that may then give you a trade if we can get a signal near enough to here. But 80 is a huge level on here. So there's nothing else in the way. That could be a decent setup. Aussie New Zealand tends to go to sleep, doesn't have a very big daily range at the moment. I would not bother with that on here. Aussie yen, I don't like this. When it's weaving like this, not interested. New Zealand dollar, the bias is to long. Again, you wouldn't short because you've got these below, but you would be looking for a long here. Swissy, can't trade it on the longer time frame, but possibly can here on the 30-minute. And dollar yen, similar scenario. Not quite sure how big that is. That's only 27 pips. So the dollar yen, if the dollar yen comes up to here and it starts to give a signal, you could go behind both lots of pivots, which is only 20, 30 pips. So you've got a double strong area of previous resistance and support, and it's got the potential for a 1 to 2. So on the daily, there's no trade. On the Earth and Sky, there's no trade. But on this one, it could well be a trade. Okay? Any questions? Lots more new folks have come in since we started. In the naughty corner, if you're late, Hilton's got his hand up. Hilton, did you put a question in earlier? Oh, you said Happy New Year. And to you. Okay, you got any questions, guys? Ask them now. We've got 10 minutes left. If folks want to ask me anything, if you're completely new, don't be shy. We've all asked the questions. Hi, Olivia. I've got to write to you today, email to arrange to meet up. Olivia's asking which broker to use for crypto. I've got accounts with Binance, which I find actually Binance is quite simple. It depends where you are actually, Olivia, because I've got Binance, Kraken, no, not Kraken, KuCoin, Bitpanda, nice platform, terrible support. And we use Atomic Wallet for swapping coins as well. And Larry has got Coinbase and Bittrex. The issue you've got, the Americans, for example, it's like now what's going on. The Americans with Ripple, with the SEC, they also have been putting pressure on Bittrex to drop some of the privacy coins this week. And I think what's going on here now is the same as what happened in the Forex world. There's quite a few of you here that I know have been with us for 10 years or more. And I think about 8 years ago, the Americans brought out a law called Dodd-Franks. And at that point, a lot of American brokers had opened overseas branches, and a lot of American clients were registered with these overseas branches. And then when the Dodd-Frank law came in, they basically forced the American brokers back to go onshore, back in the USA, and they forced them to take the US citizens with them, and they forced foreign brokers not to accept American clients. And it was all done under the guise of, we need to protect our people because they're losing money trading Forex. The same people could go to Las Vegas and lose their house. Why would the US government think that Forex trading is any different? And it was tax. They want their cut. So what is happening in the crypto world at the moment is very similar. They are putting pressure on American brokers and exchanges to drop some of the coins. And they did it the other day with some of the privacy coins. And as a result of which prices on some of them are tanking. But the point is the US brokers are getting bullied into it because they're worried about getting done by the SEC. But the other side of it is that the IRS have got technicians working with them. They've got blockchain experts. They are building up a way of tracking people, which was part of the attraction of blockchains and coins in the first place. But the ones that they're finding more difficult to track, they're being pushed not to do it. So what happens in the US? Some of the brokers, Larry, for example, lives in Georgia, and he can't have a Binance account. They won't allow it. Some states allow Binance, but they only allow the citizens to buy some coins. The Australians, crikey mo, we didn't realize till we started with the crypto side. Australia, I think Joel's with us this morning and a few of the other guys, that a lot of the brokers are only allowed to sell 6-10 coins. And again, to protect Australian citizens, which is all nonsense. So you end up needing more than one account. So it was a very long answer, and it was, I went off around the houses, but you need more than one, Olivia. But we can go through that when we meet up. Kraken is interesting because they've just got a banking license in Wyoming. So it's another sign that it is going to be regulated. The scenario with Bitcoin and Ethereum is that really the horse has bolted. And I posted something the other day, I mean, really amazing comment by an incoming US senator. There's a lady that's just been elected to the Senate, a Republican, and she said that Bitcoin would be the fallback for if the US dollar collapses. I mean, we're not talking, lefty conspiracy theorists that the mainstream press are going to denounce. She basically said, if we end up with the US dollar and the debt around the world is in such a mess and we end up with the black swan, the backstop for governments is Bitcoin. And then you add on top of it all the big companies that are getting involved now. It's a crazy world. It really is a crazy world, but there's a serious amount of money to be made at the moment. Fermi says, what about UK citizen? Do I need more than one broker account? Again, what you end up with, Fermi, it depends what you're buying. If you just buy the main coins, then you can buy them at any broker. But some of the smaller coins, and you have to start digging deep. But we do use something called Atomic Wallet, which is a free app that you can download, and you can exchange coins from within there. There are interesting things as well in the UK because with IG Index, although I'm kind of exploring it at the minute to try to do it without any leverage, but in the UK, IG Index still say that spread betting is not capital gains taxable. And years ago in the Forex world, I had an American client of mine actually moved to the UK with his job, but he was kind of thinking, well, it would be better to be based in the UK because at the time the UK didn't tax you on Forex profits. Nowadays, because they classed it as gambling and you're paying tax when you buy, nowadays in the UK, I think the definition is if trading is your main income or probably above a certain amount, you've got to declare it for the tax. Clive says, thanks, Happy New Year, everybody. You're welcome, Clive, nice to see you. Righty-ho, we'll call it a day now. I'll put a recording of this in the blog later today. Pierre hopefully will be with us in the morning, and stay safe. If you're in the UK, follow the rules, behave. And hopefully everybody will come out the other side of this in the spring. I think, unfortunately, here in Lanzarote, we might end up going back a stage as well because a lot of tourists came in at Christmas time. At the time, we're allowed in without flipping testing. So we've got a bit of a surge going on here at the moment as well. Righty-ho, everybody stay safe, have a good week, and if you have any issues, Ashley's helping with the forum now, and the forum's kicking off. There's a lot of folks getting in there, so get in the forum if you're new. If you want a quick reply to something, get in there. If you get really stuck, put a ticket in via the help desk. You're welcome, Mia, John, Clive, Fermi, Valerie, hi, Farah, and Farah. Righty-ho, see you all same time, same place next week. Stay safe, catch you later, bye-bye.